farther, to the final frontier, once reserved for nations and astronauts, outer space. I'm sure everyone has admired the masterpiece, 2001, A Space Odyssey. The philosophical question of where we come from, where we're going, has accompanied the birth of humanity and the development of human civilization, constantly inspiring our adventurous spirit and curiosity. Once upon a time, space travel was the stuff of science fiction, a contest reserved only for a handful of superpowers. But now, a new space race, ignited by billionaires, dreamers, and engineers, is unfolding before our very eyes. This isn't just about exploration, it's about business. A brand new, trillion-dollar economy is quietly taking shape in Earth's orbit, and the ticket to it lies in stock market tickers. But, my friends, investing in space travel is like financing Columbus's voyage. You might discover a new continent teeming with gold, or you might lose both you and your ship in an uncharted storm. This sector is rife with disruptive promises, but also riddled with pitfalls that could wipe out investors. So today, we'll become interstellar navigators and chart an investment landscape for the U.S. space travel sector. We'll carefully examine every celestial body in this galaxy, from the brightly lit yet unstable rising stars blazing with dreams, to the seemingly ancient, slow-moving stars, yet possessing immense gravity. We'll analyze their business models, core technologies, financial health, and real risks, ultimately pointing you to several viable interstellar routes for the future. Are you ready? Buckle up. Our journey begins now. In the galaxy of space travel, the most dazzling and public-facing companies are undoubtedly those promising to take ordinary people to the edge of space. They aren't selling products, but an ultimate dream: to escape Earth's gravity and see the blue planet with their own eyes. And the symbol of this dream is Virgin Galactic, ticker symbol SPCE. Virgin Galactic, founded by Sir Richard Branson, is a true icon in space tourism. Its business model is simple and pure. A massive mothership aircraft lifts a spaceplane, called the spaceship, to a high altitude. The spaceplane then releases the spaceplane, which ignites its rocket engines and soars into suborbital space, allowing passengers to experience several minutes of weightlessness and breathtaking views of Earth before gliding back down like a regular airplane. Virgin Galactic's core competitiveness lies in its first-mover advantage and brand recognition. It was the first company in the world to make commercial space tourism a reality. This unique experience, coupled with Branson's legendary reputation, has attracted the attention of the world's wealthy and famous, and has also accumulated valuable operational experience. A look at Virgin Galactic's financial reports reveals a harsh reality. The company is in a cash-burning pre-revenue phase. In the first quarter of 2025, the company's revenue was a mere $500,000, while its net loss was a staggering $84 million. This is a classic example of a company driven by dreams and financing, its stock price completely disconnected from fundamentals. The company's strategy is clear. After the final flight of its first-generation spaceplane, VSS Unity, in the summer of 2024, it will suspend commercial operations and devote all resources to the development and production of its next-generation Delta-class spaceplane. This is a period of sleeping on straw and tasting gall, a race against time. The Delta-class spacecraft represents Virgin Galactic's future and the core of its investment rationale. Unlike the Unity, which can only fly once a month, the Delta-class spacecraft is designed to fly twice a week. This means an exponential increase in payload capacity. The company plans to conduct the first research flight of the Delta spacecraft in the summer of 2026 and resume commercial crew spaceflight in the fall of 2026. Once the two Delta spacecraft are operational, Virgin Galactic expects to generate $450 million in annual revenue and $90 million to $100 million in EBITDA, earnings before interest, taxes, depreciation, and amortization. This represents a qualitative transformation from a cash-burning machine to a profitable one. However, Virgin Galactic's current stock price is on a roller coaster ride. It's driven entirely by market sentiment and expectations for the Delta spacecraft. With virtually no revenue, its valuation is entirely story-driven. This means its stock price has already preempted years of future success. From this perspective, Virgin Galactic's risk is extremely high. Its future depends entirely on the ability of the Delta-class spacecraft to enter service safely, on time, and on budget. Any technical setback, production delay, or safety incident would be devastating. Its margin of safety is virtually zero. This is a classic Icarus flight. Fly too high, too close to the sun, and the wax wings could melt at any moment. Investing in it is like buying a high-odds lottery ticket. You must be prepared to lose everything. Before we continue, it's worth taking a look at a name that has faded from the radar screen. Astrospace. Once a rising star in the field of low-cost small rocket launches, it enjoyed immense success through a SPAC listing. But a series of launch failures drained the company's capital and the market's patience. Ultimately, after suffering losses exceeding $750 million, to avoid bankruptcy, the company was taken private by its founding team at a rock-bottom price in July 2024, delisting from the public markets. Astra's story serves as a stark reminder to investors. Space exploration is an industry that demands extremely high levels of technology, capital, and execution. A beautiful story and PowerPoint presentation are vulnerable to the harsh laws of physics and financial realities. For investors, this is a priceless lesson. Before betting on a dream, one